Right, welcome everyone. Thank you for joining me. If you're on our 7-day free trial, then you will be in our Financial Freedom Movement group. You've got access to the units, so please make this time useful. Look through the units. Also, remember to check Forex Factory. Get into good practice as soon as you start off how you mean to carry on. Learn one strategy and then branch out from there. So what we recommend you do, you can set up a broker account. We can't recommend brokers, but ask around the team, the popular brokers, the top 10 that we use, and it will vary according to which country you're in. You get a free demo account with your broker. We quite like CTrader. Brian uses that a lot because it's web-based, so you don't have to set up a virtual private server to keep your computer connected if you're in longer term trades overnight or at weekends, and it will work across any platform. I'm certainly going to switch over to that. So the first thing that you'll do is check Forex Factory. The markets are in peculiar times. Coronavirus is a health issue, but it has an effect on the business cycle as economies stall. So today we are the 10th of March, and there's nothing else coming up today in our session. And then the other thing you can use is myfxbook.com, which will work out your lot size calculator according to your account size and currency pair, because not all currency pairs are equal. The only one that's one-to-one is Euro USD. And if you think about it, like I'm in France, I live in France, so it's about 87 euros to the pound. The Great British pound is worth more, and that's why we have pips, because we have to have a standardized unit that will measure equally across each currency pair, and that's why your lot size will vary. So if you don't work out your lot size, you're going to be leaving money on the table. You're going to be losing out. So you'll need a bigger lot size, for example, if you're trading Australian dollar, New Zealand dollar against the US dollar, etc., etc. Okay then, so let's start and we'll have a look through some of our pairs. So Euro GBP. So what I thought I'd do today, because the markets are in strange times, and that's not going to go away anytime soon. So you need to keep a good grip on what you're doing. I look at the 1 minute because it's the most recent trend, and the market moves the same way no matter what the time frame. We just tend to take longer time frames if we're looking for the bigger pips, but there are ways you can do that even on the shorter time frames. So this is Euro GBP, and you can see the blue box above shows us that we're in the New York session that opened at 1 o'clock Paris time. So sorry, 1 o'clock UK time. That's there. I don't know if I've got that set quite right. 2:24. Might have to check that later. I'll check it now. Oh, should be right. Might be to do, I think, the Americans, so their hours have changed slightly, haven't they? I think they've changed this week, so I've missed 2 sessions because of that. So nothing for us on this pair at the moment because it isn't forming a new trend. It's just coming off this pitchfork. That's just like a trend line. So there's no buy or sell for me to talk to you about on Euro GBP. Great British pound. Sorry about these vertical orange lines. That's just the trading view software glitching when price crosses quarter theory. And again, quarter theory is simply a level. Price will move between levels, and that's where the big boys put all their stop losses. So sorry, I meant to mute that Ninja Trade Hub while I'm on. So what have we got going on here at the moment? This was an old trade. I'm not in anything at the moment, so let me just tidy that up for you. Just a slight delay, and please feel free to ask questions. I mean, how's everybody doing? Are you in any trades or had a good morning or finding the markets a bit strange? Anything to report? Just take off some of these. That's probably going to ping all the time. Let's just go back to that and see if I can mute it out. It's just the system's a bit slow when I'm on Zoom, so didn't want to waste time because sorry I was on a bit later. There's quite a lot happening this morning. Options. Yeah, slight delay. It just decides to load up. I might have to leave it. As soon as I come off it, it'll start pinging again. That's a bit slow, isn't it? Okay, let's go back to what we're doing. Right, so there's the chart on the 1 minute. So for me, it's in the middle of nowhere. It's between pitchforks. It is coming down though, so it is in a sell mode at the moment. The best time to trade New York is between 2 and 4 UK time, and you can see it's below the 62 EMA, which is an average of 62 days price, and it's a rolling line of support and resistance. So price looks like it's heading down there. I like to take trades off the pitchforks. Pitchforks are simply trend lines with Fibonacci built into them. This is one reason I've liked trading the Euro GBP this week, because it happens to be that the quarter theory is alongside the pitchfork, so it's quite powerful once it as a barrier, once it moves either side of that. So it is heading down. If you're using BYOB strategy, you can overlay your indicator and have a look at that. There are, I'm not going to mark it up as a trade, but there are, it's 25 pips away from the next level. Just bear in mind, you need to keep a tight grip on the markets, because they're not going to go back to what we call normal. They are, you are going to continue to see big long wicks and spikes and swings. So make sure whenever you can that you move your stop loss to stop profit. What I do is move it to stop profit at about 1.5 pips to cover me on the commission, spread and commission, after price has moved about 10 pips. So when it's moved 10 pips, even if it swings back, takes me out, it's not taking me out right into my stop loss. So that's GBP USD. GBP, I'll just say that's going down. GBP Japanese yen. Sorry, it looks a bit like Star Wars. I did go through the Harmonic Scanner and mark up all the relevant pitchforks. Again, that orange line's nothing to do with me. It's trading view glitching as price. I was on the hourly on that. Can't remember why I was on the hourly. So let's look at the 1 minute, then you can see exactly what's happening in real time. So we've got the 62. Once the 62 is the 1 minute trend, and the blue line is the 1 minute trend shown on the 15-minute chart. So as an example, if I go to the 15-minute chart and we try and find those two lines, you can see that the 15-minute is up there. And if I draw on a horizontal ray and put that on there, so it's showing you on the 15-minute chart where the 15-minute line is, and I'll just mark that for you. Now these are very powerful, and I use them every trade I do. They help me make the decision on whether I'm getting in a trade or not. And then I'll show you the 1 minute, and then we'll go down to the minute chart, and you can see the difference. Horizontal ray on the 1 minute, and text box, put 1 minute. Okay, so the yellow lines If I take off quarter theory, so you can't see that, and I'll just hide the, I won't hide it, I'll dim it down. And just dim down that pitchfork for you. So that's the 15-minute chart. Oh, sorry, the writing didn't come out very clearly. Change it to yellow. And put that in yellow. Right, then go back to the 1 minute. And you can just see, so this is the current trend. So can you see how, well, that's not very helpful, is it? Because I can't see the writing. So I'm down on the 1 minute. If I can find the text box. So you can see that that was the orange line. The 1 minute has now moved to where the 15-minute is. The 15-minute line is right up there. So it's showing you how price has dropped below that 15-minute one and come down to where the 1 minute line is. And that indicates to me that they're about to cross, which indeed they are. But the gap is the gap is so significant. It just shows you there's the 15-minute, there's the 1 minute, how they alter through the time frames. And this is our most current one. So the 1 minute is coming exactly in line with the 15 minutes, which shows me it's about to cross, and that means it's going into a sell. So I hope that makes sense. And I'll just get rid of those. So GJ on the 1 minute, I'll need to put back on quarters theory, and it's just coming down here into some extensions. Let's bring that up a bit, and I need to find where my trend lines are, which for me are pitchforks. That one's the one we dimmed down, I think. No, that was the green one. Just see where that one is. Settings. That one. So that's where price had been today, which is why I was using that one. It's formed that double top, and it's now moving down into another one. So at the moment, if it is in a sell, then you want to see price get below 136.000, and the reason for that is that's a very strong line of support and resistance, quarters theory. And I can also see that there's another pitchfork sitting under there, which is double barrier. So if price goes below there, then it will go to, it should do, not it will, I don't know. It should go, normally price will move between levels. So at 1.5, if it drops beneath that, then to the next level, which is the extension of the pitchfork, there's 30 pips. So I'm going to put GJ down to watch it as a sell below 1.136000 for a maximum of 30 pips down to that next level of 1 point. It'll move slightly because they're on an angle. So roundabout, work out what the pips are to your stop loss. We'll have a look at stop loss 135.680, and your stop loss, you can either have it if you want to be safe because the market is swinging quite wildly, you can have it, it's a bit slow to move the screen down, have it below your previous high for a sell or below your previous low for a buy. Okay, you should be fairly safe if you've covered by these two barriers, but you can see prices come up to test. You might be able to see that pale purple dotted line. That's another part of the pitchfork, and to the pip it's testing that at the moment. So you've got to watch your levels. You've got to work out your own lines of support and resistance. I happen to use pitchforks, but you might be using levels, drawing lines of support and resistance across. Okay, so that's GJ. Let's see what we've got next. Australian dollar, New Zealand dollar. I was looking at this in Open of London this morning. Just take that off. And you can see it decided to go for the sell. Nothing I want to do on or say on that one at the moment. It's in the middle of nowhere. It still looks like it's dropping down to the next level. So if you are interested in watching that, I'd be watching it for a sell down to 1.03500. It's not in session at the moment. It's not a hot pair. We're looking at predominantly USD and Canadian dollar. American and Canadian dollar are the two pair sessions. It doesn't mean session pairs. It doesn't mean that you don't trade the others, but those are the two that should be in theory moving the most, because it's a local time zone in London. We would be looking at the market being active for when London sessions on Great British Pound, the Euro and the Swiss franc, CHF. And in Asian session, the slowest session of the three, you'd be looking at Australian dollar, New Zealand dollar and Japanese yen. That's AUD, NZD and JPY. So if you are interested in looking at this, then you want price to come below that 62 line, and it will move as the time moves on. So I can't give you a precise figure, but 1.03677 is where the 62 is sitting at the moment. You might be using the 50 MA with your Bollinger Bands. It needs to be below that, and then you'd be looking for it to drop to the next level at 1.03500. It's not one I'm going to trade, but that's what I would be looking at if I was. And then I'd set alerts to wait for it to come to certain levels. But I like to take things off the pitchforks to give me the biggest sort of elasticity, the biggest boomerang, which is a line of support and resistance, but with Fibonacci built in, which is what makes them highly accurate. You can see here the rejections off the pitchfork there, and then broken through quarter theory, again, how it respects levels up to that next pitchfork to the pip, down, stalling along quarter theory there, a break and a retest of quarter theory, and then it's under the 62, so the 62 is pushing price down, and that's how you read your confirmations. So that's AUD NZD. I'm going to close that one out. It might help make the computer a bit faster. Again, sorry about these lines, guys. I can't do it's trading view glitching. It's happens when price hits quarter theory. If I hide that, you'll see it comes off. Oh, that seems to have cleared it. So this is a London pair, and it crossed over at the end of London. Bit of a strange time for it to be moving, but I did notice it moved down at about midnight on that trade I called yesterday. It did the 40 pips, and it was moving midnight to 2 in the morning. I was up for one of the go live calls, so it was rather strange, but that's what it was doing. Now look how it's crossed over. That's confirmation number one. Price has come under the 62 and under quarter theory, so that's confirmation number two. The break and retest of quarter theory stayed under the 62, and now what's happening is it's playing between the 62 and the 15-minute and quarter theory and the pitchfork extension. So I like that as a trade, because if it comes to extensions, although those are outer extensions, which means I would want to see it. In fact, I'll look on the 15-minute to see what the trend is. So the trend here, I'd be looking for it on, this is drawing it on the 15, here's your 15-minute trend. Make sure when you're drawing a trend, you've got at least 3 touch points on your candles. So I've got 1, 2, 3, 4, 5 there. So that is a trend. and it's broken out of that trend. So if the 62 comes below the quarter theory, and you can see this break and retest of that line, then it's going to go into it should be going into a sell, but it's got to get through these two extensions. You can see if you look back here how much it's respected. It went down to quarter theory there, the two lots of quarter theory, but it's respected that outer extension quite a lot. So it doesn't know what it wants to do at the moment. It doesn't know if it's going to go for the buy. It's trying to break for the sell. So it's playing between those levels at the moment. So, and it's not a session pair. So I wouldn't be looking for that for a trade until it did. I'll show you what I would be looking at. And in fact, it's dropping down again now. So let me put the 1 minute trend line on. Join from, so that's too tight a trend. And I haven't really got a trend yet on the sell. It's not really a very good trend because there's such a lot of a gap there. So it's saying it wants to drop at the moment. The 62 has crossed down. It's under the 62, which is shoving it down, but it's broken back up, but it hasn't reached the upper levels. And let me put this on this way as well. So if it did something like this, broken, retested that, then it's going to want to go back up past the 62. But at the moment, I can't tell what it's doing, whether it's going to carry on for the sell. So you need, if you're not using similar confirmations to me, you need to put on your own BYOB Ninjacator, Kevin's brilliant bit of software where it says buy and sell. Put that on your 5-minute or 15-minute time frame, whichever one you want to work to, and look at how wide the bands are. They'll probably be quite close together on the Bollinger Bands, and see how many pips you've got. The 62, the orange one, is very similar to your purple line. I'm not going to put it on, I have got it down here, but I wanted to rattle through quite a few pairs for us today because the markets are so strange. So your 50 EMA often will follow my 62 very, very closely. So look at how many pips do you have down to the 50 or the 62, and then how many pips beyond that to the outer edge of your Bollinger Band. So if we're looking at pips from where price is at the moment down to the next level, there's 30 pips down to 1.21000, which is that next quarter theory level. But it's a bit of a difficult trade for me because I've got no pitchforks there at the moment unless I've turned them off. I did turn quite a few off because price had moved out of so many. The only one I've got turned off is that one, which isn't showing up there. Yeah, so I haven't got a pitchfork down there. In fact, what we did with this one, I seem to remember, was draw on a pitchfork off price, and that's what I used when I posted all those scans in Forex Ninja Traders last night. So that's GBP Chef. I'm not going to put that on my watch list, but that's the kind of thing you want to be looking at. Now, EuroCAD's been interesting. We've been talking about this. So I just want to, I'm sorry it looks so busy. I just want to show you what happened at market open. And the reason it looks busy is I had a Fibonacci on it, a fib, but I'll take that off. I don't really need it at the moment. So at market open, you can see on the hourly, there's this big gap. So price, because of the way the big banks operate, Forex big boys, they buy to sell and sell to buy. They've been talking over the weekend. They're still trading. It's only us little humble retail traders that can't trade at the weekend. So they had the oil and the OPEC meetings, and price closed down here, but it opened up here. So the euro went up against the Canadian dollar. I think Canada's one of its big trade areas is oil. So, I mean, I don't know the politics of it, but anyway, what happens is you've got this very big gap of 50, probably about 175 to 100 pips. Each of the orange dotted lines is 50 pips. So the big boys in the market, wherever their stop losses are, they will want to come down and close that gap to suck up our stop losses, suck up the liquidity in the market and balance. You know, this gives them imbalance in the market. And I don't know all the technical ins and outs of that. I don't do the banker's strategy, but I know enough to know that they have to close that gap. And that's what happened on the GBP USD trade that I called, which will be right back here. I don't think I'll have it still marked up, but you'll still be able to see these are the scans that we work off. If I just, there's the gap at market open on GBP USD. There's the D point, which is the reversal in the market. I caught about 50 of the 100 pips as it went up at London Open, and I caught about 10, I think 10 or 12 on the way down. And then I called a trade with 3 different take profits. It's still to hit take profit 3 at 1.3 at this orange line here, but I called both of those at 20 pips and another 20, so 40 pips in total, because price has to close that gap. Now, I happened to do it at midnight to 2 in the morning in Asian session, which is very, very strange, but you know, that's what it did. So I only do market executions, but you could always do a sell limit or a buy limit, and you know how to do those from John's 25 to life trades. So this looks to me like it's similar. The market has to come down and close this gap at some point. I don't know when that point is. And we'll just go to the 1 minute just to see what it's doing at the moment before we still got time to move through quite a few more pairs quickly. Get a feel for the markets today. So at the moment it's playing between these 2 levels. It still can't make up its mind what it wants to do between the 1 minute. The 1 minute price will always suck back to the 62 or the 50 EMA. That's its kind of home position, and then it moves out from that. And when it's moving, say it's moving now back into a buy, it will still come down. You can see where that wick is and test the 15 minute. It did it again there and wicked through a bit. Price will test the levels, and you can see it also uses the quarter theory. So when it starts to move and move between levels, it might now want to, in fact, it rejected that pitchfork 3 or 4 times. So I thought it was going to turn at that point. Let's see if I can, if I put it on minimize, maybe I can show you better. I was looking at it just before I came on with you guys, and that's why I put the fib on. So if you look at these 2 purple lines, which are the scan or harmonic scan reversal point, and they're, I always think of them like the outer edges of the Bollinger Bands because they should ping price back in. So you can see how price, it did wick through a bit there. It's rejected it once, and then it's here. I thought it was going to hold on the inner one because it rejected it once there, rejected it all along here, but it's decided to come out to here. So now it might even push up to that next quarter theory. I can see the 62 is leveling off, but I'm looking for price to come down below that, and I'm still fairly confident it's got to come down. What goes up must come down. But you know, it crossed above there, dipped below, it's crossed above. You know, but we are in New York session, so I'm hoping that means that the Canadian dollar is going to, you know, is going to be making some moves, and that the euro is going to come back down. And once it comes back down, then I would want to be in it. Once it's below this, you could, if it crosses below there, and that quarter theory, you could be looking at getting in. But you know, it's not such an easy time to trade, as we know. So you've got to look at your levels very carefully and keep a tight grip on where your stop loss is and get it into stop profit as soon as possible, So you've got 1.55000 as the next level, then 50 pips. It's always 50 pips between the orange. That pitchfork is just shy of that. So 45, 50 pips down to 1.55. See if I can get 1.55000. So once it's below those two lines, it did come down here. It came down to there, but I'm still looking for it to come down and close that gap. But you monitor how many pips you take and get in or out of your trade. We'll see how it's stalling. But you know, it stalled here, for example. It broke down there, so that would be, and then it, you know, how many pips was that if I'd been in that trade once it had broken through? So broke through there down to that next level. It's rejected off quarter theory, rejected and retested the pitchfork. So that's the sort of trade I would have got in, and then that would have been there's the 20 pips, because you'll never catch the whole of a move by the time you decided to get in or out of something. So that's a 20 pip move. As soon as I saw it rejecting off there, I would have been out of that trade, let it come up. There's another trade there, but it's got to get through that level, so not such an easy trade to take. And that would have been 17 pips. And then, you know, it's stalled out along there. And then once it's up past above there, I probably would not have got into that, although it's gone above there, until I'd seen the 62 moving well up. But then I would have been looking at that quarter theory quite closely. So if I hadn't got in till it had broken there, that would have been, that's 10 to 15 pips. So quite small moves, and you can see how the markets are swinging quite a lot. So we've got a lot of wicks and a lot of swings, and that's not going to go away anytime soon. There it is rejecting again now off that level. So this is the point at which I would put a fib on, or will put a fib on, because I'm still following this pair. So fib retracement from the high to the low. I need to just, let's put it on. I'll put it on. It could go, it's sometimes I get confused with fibs where the high and the low is, because, you know, it can vary and you can play around with them and try and get them to sort of suit what you want. So I could have put it down there on that low there, but I'll put it there at the moment. So I've got a high up there and a low up there. So what I'm looking to see is what level is it going to reject off. So it's slipping through that 76. So if it rejects off the 88.6, which is my favorite one, then I use these levels, the negatives, as my profit levels in normal times in the market. So 0 would be my TP1, 0.27 would be my TP2, and the minus 61, negative 61.8 would be my TP3. And I do like to use I find visually that helps me a lot when I'm looking at where I am in a trade and where to get in and out, and the confidence to get in a trade because of what it's rejected off. And John uses the fib off the D point for the 25 to live strategy, one simple fib, which is what we all love about it. So at the moment, I'm not thinking about EuroCAD, but I'm still monitoring it for the sell to close that gap, which is about 350 pips below, and it is off a sell scan as well. How are we doing for time? A couple more. Euro JPY, can't see anything on that. Can't even see it on my screen. Let's put it on the 15-minute. So I think my watch list today is still going to be EuroCAD, and I'll put GJ down as the sell. I might put that one on the watch list. So on Euro, Japanese yen, nothing at the moment. It's I want to see it break and retest that pitchfork. It looks like the 62 is coming up to meet the 15-minute. So it looks like that's a buy. So if you were looking at that for a trade, then you've got I just want to see it break, and it's breaking that pitchfork, but come back and retest it. It might do that before it goes up, but you've got there's 28 pips, so you'd get your 10 to 20, and it does look like, you know, it's strongly above 62 and it's crossing that pitchfork, and there's a gap between that and the level. But just remember that it's not a session pair at the moment. So I know we always say, actually one other thing I do like about it is you can see that very strong news, that must have been a news drop there. So you know, it's coming back up to balance that, and there's that gap in the market. So it's playing along that level at the moment because it's closed that gap now. So you know, it could turn on you on, you know, in this one, and just decide it's not going to continue up, because this is a downward scan, so it could decide it's going to drop back down. But there's this wedge here, so if you do find it looks like it's selling, I wouldn't be selling it until it's dropped below 118.500 on that one. Right, GCAD, Great British Pound, Canadian dollar. So I had to use an old scan. This is one of the 11 I marked up that I put in the group. So it's that's on the 4 hourly. Let's come to the 15-minute. Just write down sell for EuroCAD. The figures for EuroCAD I put in the watch list. So this is interesting because it's got to close the gap. It is pinging back into the Fibonacci's, into the pitchfork extensions there. So I quite like that. I did turn the other indicators off when I was, let me just put them back on when I was drawing them for our group. Can't work without quarter theory. Right, so the 62 has turned. I'll probably finish on this one because we're 3 minutes off and Sharon will be on in a minute. It's an upward scan, but the 62 has turned. It's pinging back into the extensions. You can see the rejections there. It's got to come down below. It's got to close that gap from market open. Each of these is 50 pips. So once it clears this level at 1.778, 1.78000, and clears that little pitchfork, which is virtually running across it. So if you don't use pitchforks, just make sure that it's broken. It preferably look like this, that it breaks and retests. I usually try and allow 10 pips for a break and a retest, but you won't always get that in these markets. But once each of these is 50 pips, so we've got 50, 100, 150, 200. So you've got a big move there. I can't predict the market any more than you, but that's the sort of move that I would be looking for. So we'll put that on. I don't quite know why it's gone so big. Inputs. That's why. I'll just put the profit level as my usual 20. I just stick that in as, and then it's a GBP pair. I always allow a minimum of 15 to 20 pips stop loss because they're faster moving pairs, GBP. But you could take it, and you know, it depends what style you're trading. If you took that, so that's too many pips. I wouldn't want to work like that. But if you covered yourself over that pitchfork, you know, I don't know what your trading style is, but if you did 40 pip stop loss and you went down to there, that's it's not my comfortable style of trading, I have to say. So allow for 2 to 1, but normally I'm more comfortable putting this on how I like to trade, to be honest, because you have to use the previous use the previous high or low for your stop loss. So let's just let me stick to my standard. So I've covered myself on a pitchfork and on quarter theory. That gives me 2 walls in between that and the market moving against me to take me out, and then 20 pips. But actually I'd be looking to go down. If I'm in a trade, I'll see if it stalls out round about the midpoint, but I'll be looking for 40 pips down to there. And once it's broken and retested this line, you could see about getting in for, there's 20 pips down to that next entry point. So I'll put that as a break and a retest and entry at 1.78240, but let it break and retest by 10 pips to solidify. Then don't panic and look at the time of hour, because you get fake outs just before the hour. I see Sharon's coming on, I don't want to hold her up. And then make sure your stop loss is above your previous high. Give yourself a buffer and make sure you put a stop profit in. Turn your stop loss to stop profit by 1 pip as soon as the price has moved 10 pips. Then you won't lose money and you can always re-enter. And then the next level is at 1.78000, and then you're looking for it to go down to 1.775. Okay. So and price will move between levels. That's the next pitchfork, and that is you know, you've got still got this huge gap here, so the market doesn't like imbalance. So I'm sorry if I've missed the questions today. Message me or I'll catch up with the questions. I'll have a look. I find it a bit difficult to monitor Facebook and do this as well. I hope we've gone through enough pairs for you that you've got something out of that, and I'll see all you guys tomorrow. And thanks very much, Warren and Robert, and everyone else for joining me.
I enjoyed that. Thank you.
Yeah, okay. Thanks, guys. Talk to you soon.
Yes,
Bye. Bye.
Thank you. Bye.